you have to open Nifty and Bank Nifty indices chart, again 3 minutes time frame. When you see a setup like this, when the price action candle is breaking into green from red, this is the time our trade setup has created and we are waiting for the trigger. Once it is broken, we wait for the 2 candle confirmation. We don't straight away jump into it because a lot of time it gives fake breakout. To avoid that, we are waiting for 2 similar color candle confirmation because we are taking upside. It is green color. If you want to buy put when market is going down, you have to look for 2 red colors candles, right? Everything remains the same otherwise. So when we get 2 green candle confirmations, we enter the trade and we will continue with the trade unless and until this green color turn into red. Here it has not turned into red, so we close our terminal exactly 3 o'clock. And stop loss, I have already told you, you have to trail your stop loss with the green super trend line a bit away from this line. You have to trail, you have to keep adjusting your stop loss. So here is a trade in Bank Nifty, same 3 minutes time frame. We are looking at indices chart. We will not take this trade. Why? If you remember, I told you in previous slides, market doesn't like gap ups or gap downs. This is a gap up which is happening. So according to our study, market will definitely try to fill this gap. There is a possibility market will come for the gap to fill, or it might not. In both the scenarios, we have to wait. Remember, I told you, don't rush in for trade. We have to wait. So this is what is happening here. Once a trigger is formed and market is in green zone, we are in no hurry because right now, even if the trigger is there, there is a problem which is happening here. This is what? This is the gap, and the Bank Nifty actually came down to fill this gap. If you can see this line, market actually came to fill this gap, filled it, took support from exponential moving average and reversed. Now, what about our trigger? Now, once it has taken support here, we will wait for 2 candle confirmation again. But now we will not wait for the breakout from red to green because already it is in green. Now these 2 green candles are formed, 1 and 2. So these are our candle confirmation. And now on third one, we will enter and look at the upside moment it has given. One more thing I want to tell you. There is a high chance before market go for a rally, it will shake off a lot of traders from its back. What do I mean by that? Let's say market is planning to make a big candle. Before big candle, it will do something which will hit a lot of stop losses and then it'll run. So to avoid this, you have to understand the characteristics of option trading. This happens a lot of time in the market. So this is where our stop loss technique helps. We will not keep the stop loss straight away on the line, but a bit far, so that if this is happening, we are not the one whose stop loss gets hit. And things like this. I've already discussed 2 fake breakout situations with you. One was if you have resistance above it, even if the trigger is coming, don't take it. And second, something like this, the gaps. And there are a lot of factors which I have already told you. They will keep coming in the examples and I'll keep telling you.